Peter Schiff is CEO at Euro Pacific Capital, which has about $1.9 billion of assets under management, AUM, as of the middle of this month. He joins us live out of Connecticut. Excuse me, Peter, good to see you. The data claims looking good. What do you make of this? I mean, this recovery we're seeing in the U.S., are you buying it?
No, I mean, it's only looking good if you're looking through those rose-colored glasses that are, fogged up with Fed stimulus. It's not a real recovery. We didn't even have a real recession yet because the government didn't let the market finish the process of correcting all the imbalances. Instead, we just augmented those imbalances, and so we're living on borrowed time, literally. As the stimulus fades away, the recession will return with a vengeance.
Okay, the thing is, I mean, the Fed's not going to let that happen, are they? And if we're talking about a case of diminishing returns, I mean, just how much more left can the Fed do?
Well, all the Fed can do is postpone the pain, but only by exacerbating the pain. But eventually the Fed can't do it anymore because the bottom will drop out of the dollar. The U.S. dollar is going to lose a lot of value, not only against goods, but against other fiat currencies. But the dollar's going to go down. That's going to push prices up higher in the United States, consumer good prices. And eventually the Fed is going to have to turn off the presses in order to save the dollar. And that's when the real fun begins, because that's when this whole bubble economy implodes, because interest rates go way up and we can't service all the debt. So we end up defaulting. So
what are policymakers going to do if the Fed's going to be forced, do you think, to turn off the printing presses? Then what?
Well, we'll find out. I mean, we haven't dealt with a responsible Fed, since Paul Volcker was there in 1980. Hopefully, we'll do the right thing and slash government spending. But who knows? I mean, the chapter hasn't been finished yet, so we'll have to see how it ends.
All right. So you think the dollar's in for some real pain? What does that assume about what you see happening to the yen?
The yen's going down too. We're stewing in the same brew. Although I think that the problems in the U.S. are worse than the problems in Japan. But Japan's goal is to create inflation, and they're going to succeed. But you have to be careful what you risk for, because you just might get it. I mean, they're already getting it now. Look at McDonald's has just announced that they're raising the price of hamburgers by 25%. Prices hasn't gone up in 5 years. Now they're raising them. I guess if the Japanese get lucky, they'll raise them again. Everybody's going to start raising prices in Japan. The Japanese are going to have to pay more money for everything that they want to buy. That's not going to create economic growth. That's going to make the situation worse.
Peter, with these concerns about growth in the U.S. and Japan, where do you put your money? Stock investors don't seem to care that the economic data is all that bad in the U.S., even though we got some bright spots overnight. So where do you put your money in this kind of environment?
Well, we actually have some Japanese stocks, although we lightened up a little bit recently because they have had a pretty good run, even when you take the currency effects out of it. But, we're investing more in other parts of Asia than Japan. I think that there's a lot of problems brewing based on what Japan has done. Remember, they have a lot of debt, and when interest rates rise, when the Japanese are paying 2 or 3% interest on those government bonds, and you're talking about, how much debt they have, this is a huge disaster. I think that we have a similar problem, only it's even bigger when our interest rates go up. So both the U.S. and Japan, have a serious, date with destiny. But, I'm avoiding, in general, the countries, and I'm investing in currencies and in stocks in other parts of the world that are not making these monetary mistakes.
Like where?
Well, look at China. Look at the Hong Kong market or the Singapore market. I think there's much better in places to invest in Asia than in Japan. As I said, even though we have some of the Japanese exports.
They've been doing terribly, though. The Hong Kong and Chinese markets have been doing awful this year.
Well, that's where you get good valuation. I mean, if you're a long-term investor, you got to look at valuations, and you got to try to think about what the future is going to look like. Are those markets always going to be doing poorly, or might they be doing much better in the future? Excuse me?
Is the rally overdone in the U.S. then? Are you taking money out? Are you taking money out of U.S. stocks and putting them to work in emerging markets like China?
We don't have a lot of money invested in U.S. stocks. We do have some. I mean, I'd rather own U.S. stocks than U.S. currency or U.S. bonds. But I think the rally in the United States, just like the rally in Japan right now, is being driven by the central banks. It's inflation driven. It's money losing value, not necessarily stocks gaining value. But all that money printing is going to have dire consequences economically. So I don't think that the real returns are going to be that great, because a lot of them are going to be obscured by inflation. And so if you want to make real returns, I think you've got to look abroad. And there's other countries, again, that aren't doing this monetary madness. And at the end, you get a crisis. I think the United States is headed for an economic crisis that's going to be far greater than what happened in 2008. So in real terms, that's not a good market for equities, although it's going to be even worse for bonds.
Yeah, it sounds like you think Abenomics isn't going to work either. It's going to be interesting to listen to the BOJ and see what they have to say about inflation later this morning.